All right, in this lesson, we are going to go over an example. I'm going to walk you through an example here. And this example has to do with the statement of retained earnings. So I'm going to show you how to prepare the statement of retained earnings twice in this example. So let's take a look at our example prompt and walk you through the steps that it takes to prepare a statement of retained earnings. Now, we'll start with company A here, who started their business on January 1, 20X1. In their first year of operation, the company sustained a net profit of $230,000. It also paid a dividend of $150,000. Now, during year 2, company A achieved a profit of $265,000 and paid dividends of $175,000. Using the above information, prepare the statement of retained earnings for 20X1 and 20X2. So our job is to take this information here and prepare the statement of retained earnings. If you remember in the statement of retained earnings video, we talked about that the statement of retained earnings basically is a reconciliation of the retained earnings number, and that number represent how much undistributed profits that the company has decided to retain rather than distribute to their shareholders. So we are going to prepare that statement here by starting with the beginning balance and then making adjustments to it and then getting to our ending balance. So let's go ahead and move to 20X1 and prepare that statement of retained earnings. So we've got a mock-up here of a statement of retained earnings. Notice that we have a who, a what, and a when. So who is this for? This is for company A. What is this? This is the statement of retained earnings. And on what date is this for? December 31st, 20X1. All right, so we've got the statement of retained earnings here. It's asking us what is the retained earnings as of the beginning of the year, which would also be the end of last year. Well, if you notice in the prompt, it says that started the business on January 1, 20X1. So if they started on 20X1, but we're asking for the ending balance of the prior year, they wouldn't have anything because they didn't even start their business at that time. So the retained earnings at the beginning of the year is going to be 0 because they weren't in business. So they wouldn't have a number there. All right. So moving on, it's saying what is net income? So we're doing this for year X1. And so we want to see what that earnings was for that first year. If we notice, we've got net profits of $230,000. So that first net income number that we have for the year is $230,000. Okay, so then the next thing it asks us for is dividends paid to shareholders. So the dividends paid to shareholders is the amount that we've actually paid to those shareholders as part of a reward for their investment in our company. So if you notice here in that first year, it looks like we paid $150,000 in dividends. So I'm going to put $150,000 in the dividends paid to shareholders. Now the question at this point is, okay, are we going to add or subtract the net income? Are we going to add or subtract dividends paid to shareholders? So when it comes to net income, that will always increase stockholders' equity or retained earnings. So that will always increase retained earnings unless we have a net loss. So we'll add the 230. And then dividends, that's basically us paying our earnings to our shareholders. We're distributing funds to our shareholders. Well, if we're actually distributing those funds to our shareholders, we as the company no longer have it. If we no longer have it, then we want to subtract it from that retained earnings or that net income. So we'll subtract that. And so if we go 0 plus 230,000 minus 150,000, we get $80,000, okay? I'm trying to see if you yell back to me. I mean, most of you are probably not yelling back to me. You're just sitting there just passively taking in this video. Maybe. All right, so $80,000 is our retained earnings at the end of the year. Now this question here wants us to move forward to 20X2. So let's go ahead and move forward to 20X2. Remember, we ended the year with $80,000, which means if we're going to end with $80,000, we're going to start the new year with $80,000. So here we go. Let's start with the end of year one? Well, the end of the year one will be the beginning of year two. So the end of year one, we had $80,000 in retained earnings. That's the amount the company decided to retain instead of distributing that to the shareholders. They made $230,000 in year one, but they only distributed $150,000 to the shareholders, which means $80,000 needs to be accounted somewhere. That accounting happens right here. All right, then we have net income. Do we have net income in year two? Well, it looks like we did. We achieved a profit of $265,000. So I'm going to add here $265,000. Why are we adding that? We said that retained earnings goes up when we have income. It goes down when we have losses. So in this case, we have income, we have profit, so we're going to add it to our balance of $80,000. Then we have distributions of dividends. Distribution of dividends totaled $175,000, so we're going to subtract $175,000, right? Because we're no longer retaining those earnings, we're actually giving those to the shareholders, and if we're giving that to the shareholders, we no longer have it, so we need to subtract it. So we've got $80,000 plus 265 minus 175. If we do the math there, we should get $170. I don't know if you yelled back at me, but hopefully you did. $170. Anyways, retained earnings of $170,000. So we ended the year with $170. So we can break that down a little bit. We can say of that $170, $80,000 was from year one, $90,000 is from year two. Now, as companies go along for a long time, they don't keep track of that per se, like on their financial statements. They won't list it that way. But for all intents and purposes here and learning this, we're just knowing that $80,000 of that $170 came from last year, and then $90,000 of that $170 came from this year, totaling $170,000. So that makes sense at the end of the day. So that is the statement of retained earnings for year two. So that is our first example here on preparing the statement of retained earnings. As you can see, it's not complex at all. We're just trying to find what our beginning balance is, what's our profit, what's our dividends, and then at the end of the day, how much do we have left in retained earnings? You should also know that at the header, we need to know the who, the what, and the when. So we had Company A, statement of retained earnings, December 31st, 20X1. So we should know that when we're preparing the financial statement. Now, how do we make this harder? So I always like to look at, how do we make this a little bit harder one step as we go further? Well, we can make this a little bit harder by not necessarily telling you what the profit is. So for instance, instead, maybe I tell you that revenues were $300,000. Expenses were $70,000. Prepare the statement of retained earnings. So you don't have a net income, but what do you know? You know, in a prior lesson, we talked about what the equation is for net income. That equation is revenues minus expenses gives you net income. So what was the revenue? $300,000. What was the expenses? $70,000. 300 minus 70 is 230. 230 matches their 230 right here. So, sorry, I'm looking one more. Hold on, go back. Here we go. 230 right here on your screen. So 300,000 minus 70 equals 230. That would be your net income that we would put there. Dividends, we usually will tell you the dividends, but another way that we can make this a little bit harder, instead, we can tell you that dividends was paid out $1 a share, and the company has 150,000 shares. Well, what that means is that every share that you have, you get $1 in dividend. Well, if there's 150,000 shares, 150,000 times $1 a share gives you $150,000, and that would go right in the dividends. Now, again, that's an easy example. It'd be a little bit more complex. It'd be like 150,000 shares, each being paid 25 cents. So you take 150,000 times it by 25 cents, and you'll get some number, and that number will go in the dividend. So again, taking it one step further, how can we make this a little bit more difficult, but really we're not making it more difficult. We're just trying to figure out if you remember what we taught you in another lesson. So that's kind of how we can do that here. So I hope you enjoyed this example one on preparing the statement of retained earnings. In the next couple examples, we'll look at some of the different aspects here that we learned here in section 1. So I hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below, and I'll respond to you on what you got out of this video. So hope you enjoyed this video, and we will see you in the next lesson.